Today, ladies and gentlemen, we're breaking down the six-figure dividend portfolio between the two accounts, hitting all-time bloody highs today, hitting around $115,600 as the S&P starts pushing into the new breakout levels, which we're all excited for. On top of that, we're looking at the e-cigarette news with the new issues that are going to be coming out in the next few weeks to see what they're actually going to deal with, because I own Altria Group and British American Tobacco, and they make up some of the largest positions in my portfolio. And then we're also going to talk about Graham Stephan today, because I watched a video yesterday where he was talking about no friends, anxiety, and loneliness, which really relates to my entire career as a magician. So let's jump right into this. Welcome back, my passive income investors alike. This video is going to be a lot of fun today, but I want to start with some of the news, and we'll start with maybe the social anxiety, especially when you're in this kind of realm of investing and trying to get out in the world. And Graham Stephan was just talking about how all he did was work, didn't have a lot of friends, and that sounds like most of my life. I was somewhat of a loser in school, and I got into magic because, well, essentially magic was helping me get my name out there, and it was pushing me into my uncomfortable zone where I would actually have to start talking to people as a loser that didn't have a girlfriend until he was like 19 or 20. Not that relationship lasted very long, but either way, guys, I think this video is very helpful, and you should take some time to watch this video because I think it's very relatable. I posted a video yesterday where I was performing for the Royal Bank, standing in front of the largest bank in Canada, doing the introductions for basically the entire event. Now, that is a high pressure situation, and it's taken me years, and I'm glad that I'm only 27 and I've been able to get this comfortable. But what I used to do was something that Warren Buffett says. I'll look him up here real quick. But the great Warren Buffett, guys, said the most important class that he ever took was a public speaking course. And that's what I started doing when I was probably around 17, 16. I was learning a lot about something called neurolinguistic programming, or NLP, which maybe I'll look that up, define it, just so you guys can see what this is. Now, neurolinguistic programming is just something that helps you understand how the human condition works a little better. It's kind of like pseudoscience, but it's about breaking out of your bubble, getting to know people better, getting to know yourself better, and then basically just using these techniques to be a better public speaker. I used to do everything from like Toastmasters. There's so many different things you can do today to help start getting yourself comfortable talking in front of crowds. And as a full-time magician, that is crucial to my career. And I just wanted to leave that little note there for you guys. If you have social issues, start looking into some of this stuff, because like I said, I think becoming successful in anything in your life is going to require some level of talking to people comfortably and openly in an environment that's going to help you get people to understand your vision, help you understand their visions, and finding a way to basically come to some common ground. Very, very useful skills in the investing world. Now, talking about e-cigarettes, and we're going to get into the six-figure portfolio to look at what's going on, but I just really quickly want to talk about the administration plans to ban e-cigarettes. As vaping-related illnesses spread, President Trump and top health officials met at the White House to discuss ways to keep products from teenagers. Now, this is where things get really interesting. So the Trump administration said on Wednesday that it would ban the sale of most e-cigarettes at a time when hundreds of people have been sickened by mysterious lung illnesses, and teenage vaping continues to rise. Now, there's a bunch of different things going on, because this news is coming from people using illegal marijuana products, and it's a damn shame because it's starting to leak into the vape market. Now, as a past smoker, this is just my personal opinion on this. I smoked cigarettes for a good solid couple of years. Nothing crazy, but I was still smoking through about a pack a week. It was a friggin' horrible habit. And it's so addictive. I needed something that wasn't as addictive but gave me the fixation. So I switched to vaping. And I essentially used vaping to basically quit smoking. And then I got tired of vaping, and I just got rid of it altogether. Now, mind you, like I said, look at here. Last year, the FDA retreated from the threat to prohibit the sale of e-cigarettes as increased rates of teenage use. Public health experts public outrage stoked by the accusations that Juul Labs was deliberately targeting youth led the company to vulnerability stop shipping most flavored pods like mango, cucumber, to thousands of retail locations. Now, the big problem here is kids getting these products, but personally, from a smoker to a vapor, and just knowing all the stuff that exists out there, people aren't looking into the fucking science. It's really annoying because vapes have been around for almost 15 years now. This isn't something that is, I think it's been around longer than that at this point, and they have run substantial tests and have proven that vape use, especially just without nicotine in it whatsoever, doesn't do any real damage to your lungs. They can't find any damage caused effects by people that vape somewhat regularly, and I honestly found in my own personal use of it, and I vaped for about a year, that I didn't feel like I didn't cough up any black stuff anymore. I felt way better. Like, I didn't feel as bad. And honestly, when I quit smoking vapes, it was just because I got tired of buying the fluids to refill it. It was out of convenience rather than an addiction. And I felt like these things are incredible to help people quit smoking. The problem is kids are buying these, and they're buying illegal products from the illegal marijuana industry, which is what I talk about a lot, guys. They sell products for these things, which I could probably show you right now because I've seen these. I think they're called Joy Pods. Let me just take a quick, let's just see what comes up if I search Joy Pods. Yeah, so these are the illegal products that kids are getting their hands on, which are basically use jewels but use marijuana. And they're saying that the chemicals that they're using in here, which I think is vitamin E and some other stuff, is coating the lungs and it's not leaving. Whereas with regular vapes, it's all basically just, it's just moisture in the air, right? Like your lungs don't contain moisture. So you exhale all of it, and the only thing your lungs end up absorbing is the nicotine, which we know doesn't cause cancer. We know nicotine on its own is no real different than coffee. It doesn't really do much other than gives you a little bit of a perk up. We don't know what the long-term effects of it are, but nicotine in and of itself isn't nearly as toxic as a cigarette with the thousands of chemicals you're inhaling. And I think all this is really interesting. I'd love to know what you think in the comment section below. But in light of this, let's take a look at the S&P 500, head in over to the dividend portfolio and see what the heck is just going on here. Now, I think today we'll start with the Vanguard index funds before we look into any of the other individual stocks, because this lets us know what's going on in the overall market. And this is within my RRSP. This is the account that I'm using to defer income a little bit for the time being. But as we can see, guys, this index that I'm holding, which is VFV, it's the S&P 500 index in Canadian dollars. So you don't have to deal with any crazy conversions on the dollar amount, which we can see is still pushing into all-time highs. I bought this to help stabilize my overall portfolio, and I think it's crazy to see even this starting to go into the green with a little bit of money that I have in here, considering I bought these at all-time highs. I mean, I was buying this just under $70, which we could see, guys, is literally when it was at the top, and people thought I was nuts. And this is when we still got a lot of fear of recessions and stuff, which is still always a possibility, but I don't invest based on those perspectives unless there's something that has some real fruit involved in it. And what I mean by that is just something that is fruitful, like the information has some real grounding behind it, which all of it does to an extent, but it's hard to understand the entire economic system. And I think, just like I said, there's just so much at play here, and I'm only buying for cash flow. And even if these stocks dropped 50%, so long as the companies are sustaining in a recession, then who really cares? So long, it's like owning a house. You're not going to look at you're literally, if you own a rental unit, you're not going to look at the value of that property every single day. What you're going to be paying attention to is making sure the payments are still coming in and the tenants are still paying you your rental income. That's how I kind of look at stocks. So looking at the managed account, this is the most important account because this is the one that I'm gonna have to do a lot of managing with in the next 3 months, because I have to pay tax on this money. And I'm trying to find a balance that's going to protect me from paying the most tax, but also leaving enough money in here I can contribute to my tax-free savings account at the beginning of the year, which I will update you guys more on progressively as we get closer toward the end of the year, especially in this last quarter coming up. Now, this account has a lot of mixed bag in it, and I don't like judging my entire investment account off these investments, because these are newer investments to my portfolio. And essentially, when I buy a new investment, I don't really care what it does over the first 2 years. Honestly, if it drops like Tesla has here 30%, I don't really care, because I don't ever plan on selling these positions. So I mean, looking at it within a year is kind of ridiculous. You want to come back to me in 5 or 10 years, and then we'll have a real discussion about these positions. But so far, guys, it's funny to see Starbucks, as soon as it takes a drop, it starts coming right back. I'd love to see this thing drop back into the 80s. It never seems to want to get below the 90s. And this is the lowest that Starbucks has been in quite a little while. I don't own enough of it to make any big difference in the overall portfolio, but I just wanted to add it as a part of a drug segment to my overall portfolio, because like I said, guys, I love the drug sector. It's one of those most reliable things. No matter how bad the economy gets, people are still going to smoke cigarettes. They're still going to buy alcohol. They're still going to be getting their drugs from companies like Johnson & Johnson and the doctors. It's just same with coffee, guys. Coffee's a drug, and it's just the weird, most legal drug that we're just comfortable with. But even still, you can OD on caffeine, and a lot of kids have. Especially now that you can buy caffeine pills and things of that nature. It's all just drug related. Now, to me, this is not a moral debate. It's something that has been a part of society for a very long time. If you do these things respectively and responsibly, I look at cigarettes as not being unhealthy. I don't enjoy them personally anymore, but at the same time, I just look at it as like a coffee break. Going out and having a cigarette, I honestly think if you do it within means, like there's people that smoke into their 90s, depending on their genetics and how they can handle that. I don't think it's something that people should necessarily be doing it. They're focusing on their health. But as a break, like if you want to go out and have a cigar once in a while, like you have to enjoy life to an extent. It's the equivalent of having Coca-Cola, right? Like Warren Buffett says, he's like, well, if drinking Coke is going to knock, 3 or 5, 10 years off my life, in the full perspective of everything and the enjoyment that I get out of it, is it really going to make that big of a difference, especially at his age, right? Like you've pretty much lived your life as it is. So I have no moral debate against this. If you are a drug addict and you don't have control over your own functions, then you need to get help. Some people shouldn't be involved in drugs. I completely get that as well. But honestly, in the full grasp of things, guys, tobacco and drugs have had just as long a history as gold and silver have. It's one of the few currencies in society that have been around since the eons of eons. And I just can't ever see these companies going anywhere. Their balance sheets are absolutely incredible. Like if we just take a quick look at their fundamentals and dividends, currently Altria Group is paying a 7.16% yield. Earning per shares is still at $4, which is really healthy for this company. Price to earnings is extremely low. Price to sales is a little lower than I'd like to see. But honestly, for this company and the money they have on the books, I think they're going to have no problem paying these dividends. They're one of the best performing stocks of all time. On top of that, I'm not saying buy these stocks. I'm just telling you that obviously I personally own them, and I've been down on this position quite substantially at this point. But I just, like I said, guys, I think it's still on sale. I think it's incredibly cheap at the rate that it's sitting at, and I will be holding this for a very long time. 3M was one that I purchased on your behalf, which is starting to come back. Also in the other account, I also hold my RBC account, which is actually up because of this, and it's sitting at 1,066 CAD, but the only position I hold in this portfolio is 3M, based on your recommendations, which so far is looking to turn out pretty well, because essentially all these big excuse me, I have a bit of a cold right now. That's why I'm not really filming on the camera, because my nose is running like a sieve. But 3M got a tax break. All these big companies that we were worried about that were going to get hit with these tariffs, they're so big and they're such big conglomerates, it doesn't even matter at this point, because they're getting tax breaks like Tesla did. Like if you look at Tesla, guys, they got a huge 10% tax tariff break in China. 3M's getting one. All the big major conglomerates, so they don't have to leave, or there's no fear of these companies leaving those economic systems. The government, China, they're all giving them big tax breaks. So honestly, I think this was a really good decision to pick this up when I did. Whether I hold this long term, some of them, I'm going to hold a fair share of these long term no matter what. But once I start having to rebalance my portfolio into the end of the year to try and save on taxes, some of these positions might be lower, they might be changed, which I'm hoping you'll stick around to learn and see what happens. And then moving into the final account, my golden nugget, my gem of all gems, my tax-free savings account, which currently sits at $88,160. All the income in here completely tax-free, and it's all coming back because of the banks. Looking at Canadian Imperial Bank, and the banks being some of the most shorted banks in the entire world right now, I have no problem holding these. And like I said, I'm glad I don't sell based on fear, because a lot of people were getting pretty paranoid when this thing was hitting the low 100s, high 90s only a week ago, which, like I said, it drives me nuts when this thing doesn't want to load. But either way, guys, these banks aren't doing terribly. They raise the dividends. I think people are starting to see them as cheap, so there's a lot of money flowing back into them. I am not comfortable personally with the amount of money I have sitting in these banks, but I'm also not an idiot, and I don't sell out when things sell short, because I do like these companies long term. And with a 5.5% dividend yield, I wish I was buying it now, but I have a drip set up just to keep getting some shares coming in the meantime while things are down. But what's going to happen here is, as this thing gets higher and higher, I'm going to be selling out of a fair, not a huge chunk of this. These currently are overscaled positions in my portfolio, along with the tobacco sector, because in this portfolio, which we'll get into in a second, I also own MO and BTI. But in light of all of this news, guys, it's nice to see that the banks are starting to come back. Now, like I said, when this thing starts getting closer to the 110 mark, I'm going to sever off somewhere probably about $3,000 to $4,000 in this. I just don't want to take a huge loss on it. And same with Bank of Nova Scotia. I'm probably going to take about a couple grand out of this and get these closer to about a $10,000 mark. And I'm going to start leveraging them into qualified REITs. The fact that they're in a tax-free savings account anyways is amazing, but I just want to try and get my monthly income up, because that's what I am using this account for, is basically to give me a month-over-month income. and tax-free income on top of that, which we're going to look into in a quick second here. But we'll take a look at some of the other positions. Northland Power has been getting beaten into the ground right now. It's one of my favorite utilities. It's a Canadian utility. And the reason it's been getting beaten into the ground is just because they did a acquisition in a Colombian business. And because Colombia is under a lot of issues right now, a lot of people saw it as a bad acquisition. I don't think it's that bad of an acquisition. I haven't done my full homework on it yet, but I will be looking into it very shortly just to make sure that it's not going to severely negatively affect this company. But this is one of my favorite utilities because it pays a monthly dividend, and clearly I've been holding this for a very long time. I've taken some huge profits on this, and then I rebought back into it. But my average buy price on this back in the day was somewhere around $17 to $18. And then when I sold out to transfer money into my tax-free savings account, I bought it back. So there are huge gains built into this holding for me already. So I don't really care what it does so long as it keeps paying me that monthly drip. Whereas when we come down into here, Southern Company is my best performing REIT, or sorry, I keep thinking these are REITs because I always think of monthly payments. Sorry, my utility. And I can't get over this stock because it's just been driving me bonkers watching it because it just never turns around. And I can't really tell why, but it'd be nice to see this thing take a big plummet. Like I want to see this thing drop back into the low 50s so I can keep my drip buying decent cheap shares, because my yield on cost is something like 5.5% or something like that. And we'll take a look at that in a second. But right now the yield on cost is shit. And not a lot of people usually buy into stocks unless there's something crazy going on. I'm going to have to do a full breakdown of the utilities here in a little while because I think there's some crazy news going on there. But other than that, guys, tech sector is still doing really well. I wish I was selling my Apple shares now. As many of you know, I leveraged down my positions in these companies because I don't want any company making up much more than about $10,000 to $12,000 as a position in my overall portfolio. And unfortunately, I had about 20,000 sitting in Apple. And then what I ended up doing was leveraging it down just a wee bit. I took a fair chunk off the table to buy British American Tobacco and MO, which we could see aren't really rallying the portfolio too well. But at the same time, I bought those for the dividends because Apple doesn't pay a huge dividend, and I'm holding Apple more for the growth than the dividend, but at the same time, I still want those payments coming in. So instead of making the tech sector such a large position of my portfolio, I figured I would get rid of some of those shares. But now I have a really healthy balance between Apple and Microsoft. Those positions to me are pretty much filled out at this point. I'm not going to be adding too much more, though. Mind you, at the beginning of the year, I might buy just a couple more shares in each because, I mean, why not? They're just incredible companies long term. But what I'm going to end up doing here is with MO. And like I said, these positions are in US as well. So just remember that 8,700 converted to CAD is about 11,000. So these positions are at scale in this portfolio. The only ones that I have to really bring up are in this portfolio. Like I said, at the beginning of the year, I can contribute more. I am going to buy a bit more MO and BTI to finish off the positions, and I'll sell the rest of them off in my regular account. But for right now, I'm just holding on to the scale that I have in them, which I think sits about 15,000 between each of them, which is a lot higher than I want, because that means it's making up about $30,000 of my overall portfolio. But I really think these companies aren't crazy discounts. And I think in a year or two, when all of this news blows over and people realize the balance sheets are incredibly healthy, that they're going to be interested in picking up some shares and see that these are on a major discount. My own personal opinion, I am not a financial advisor. And then the only other REIT that I own right now that is GEO Group, which has still been coming back quite nicely. We're seeing it hit back into the mid 18s here. I really overpaid for this company, but I love the monthly income. That's not monthly, but it's quarterly payments. But the yield is insane, and they can afford to pay it because taxpayers are basically paying your dividend yield off this. And this is just a way of getting some of your tax money back that ends up in the jail system. It's a massive, massive company, $2.2 billion, guys. It's not going anywhere anytime soon. That's why I have it set up on a drip. I'm just going to keep letting the drip shares come back into this. But let's take a look at the overall income and just see what's going on with the income lately here, guys. Because like I said, my best yield on cost is Apple and Microsoft, paying me exactly 1.78% each. I love seeing that personally. But in this account alone, just taking a quick peek through everything here, guys, we can see BNS, now that it's coming back, I'm getting a decent yield. CM is finally paying me about 5%, but it'd be nice to be buying it at that 5.5%. But like I said, when I leverage this down and start buying into some other REITs, we should see my overall income go up. But we're just going to be patiently waiting. There's no rush on this. I'm just going to gauge this out over the last quarter and just see what happens. And like I said, guys, we can see 5.61% on my yield on cost for Southern Company, which is absolutely mind-blowing to me. Because like I said, to get, a full percent higher than basically what it's paying out today, actually more than 1%, is kind of incredible. Which is nice buying it on those crazy dips. And we can see the income for October is going to be the best. We're getting it's all set up on a drip, which means these are reinvested dividends. So they're just going to give me shares instead of paying me out in cash. And we're going to be buying about $600 worth of dividends, or a little more than that actually, because this is in US. So we'll be getting about $650 bought in dividends, or basically, share buybacks, which is going to increase the overall dividend income into the end of the year. But let's take a look at some of the other accounts and their dividends. This account is going to change a lot in the next 3 months. I just got to figure out what's going on with it. But we can see in here, even for October, we're getting another extra $100 that is getting reinvested as well, which should probably be coming off MO, because I have it's one of the only companies in here set up on a drip, and it's making me quite a healthy chunk of change. I am overexposed to these, like I said, so I will be leveraging down in these, putting some of this into my RRSP just to maybe balance it. I'm not 100% certain just yet. And then I'm going to start buying some REITs to keep the dividend income up as much as humanly possible. But this account needs to find some form of balance, because, like I said, at the end of the year, I will owe about $6,000 to $8,000. I think it's going to be my rough range right now for paying taxes, and I'm going to try and lower that to closer to about a $3,000 range. I'm trying to get it in a position where I'm going to owe about $3,000, and I'll be able to come up with that just for my working income, and that way I won't have to touch the portfolio for the rest of the year. My portfolio to everybody else in the stock market, it's a bit of a game right now, because a lot of people are doing very well, whereas my whole portfolio this year has been generally flat. But right now it's coming back with somewhat of a vengeance, and I'm really happy about it coming back. I'd like to see it hopefully sometime by the end of this year being worth somewhere between 115 and 120,000 with the dividends, my own personal contributions to it, and then just hopefully having some good capital gains built in as well. That would be the ideal set of circumstances, but there's no guarantees with any of this, obviously, but I'm just letting you guys know. And you can also let me know in the comment section below what you guys think about all of this. I hope you enjoyed today's update on my six-figure dividend stock portfolio. It's been a bit of an interesting video, and I'd love to hear what you guys think. So stay cool, stay awesome. I look forward to chatting to you guys real soon.